Okay, let's discuss. In May 2004, the Indian stock market witnessed its biggest crash in its 129-year history. As soon as the market opened, within 20 minutes, share prices fell by more than 10%. But why did this happen? Well, because the expected ruling coalition government lost the election. However, in May 2009, when the ruling coalition came to power, the stock market rose. And then in 2014, when the new Prime Minister was elected, the market rose again. The same story repeated in 2019. So, what will happen in 2024? I'm also thinking the same. So, I researched this. Jefferies Equity Strategy Global Head believes that if the ruling party loses, the markets could drop by approximately 25%. Of course, they also believe that the market will recover. What impact will this election have on the market? Well, that's not known. Markets are unpredictable, more so than politics. Unpregnant data has been analyzed to see how previous elections have impacted the stock market. By the end of this video, you'll get a clear idea of how the market behaves during elections. And finally, we'll also see which sectors are more focused during elections. So, let's dive into the numbers and see what the data says. Alright, I've also included some reading resources in the description, so make sure to check them out. Now let's get started. First, let's see what history says. Historical performance. A lot has happened in India. From reaching Mars to becoming polio-free, winning the Cricket World Cup, and winning Oscars. In fact, even Shah Rukh Khan made a crazy comeback after many flops. And there were general elections too. And by the way, we are talking about the world's largest elections. Right now, the ruling party is trying to come to power for the third time, while on the other hand, the lead opposition and other parties have formed alliances and are challenging the ruling party. Now, let's turn the clock back. Here are the dates of the general election results from 1980 to today. Now let's see how the benchmark indices, mainly Nifty 50 and Sensex, performed as shown in this graph. We'll compare the performance of these indices just before the announcement of election results and then see what changes occur after the election results. And this will surprise you. Let's start with 1996. What happened in 1996? In the elections, the opposition party emerged as the largest party, but they didn't have a majority. To have a majority in the Lok Sabha, you need at least 272 seats out of 543. But the opposition had only 161 seats. No party had a clear majority. But since the opposition had more seats, they were invited to form the government. Atal Bihari Vajpayee became the Prime Minister, but only for 13 days. The shortest government in history. But why? If a single largest party doesn't get necessary support, they have to form alliances to prove their majority. When the opposition couldn't prove their majority, the third front formed the government with the support of the previous ruling party. So, H.D. Deve Gowda became the Prime Minister on 2nd June, 1996. But this government lasted only 2 years. Then Ik Gujral became the next Prime Minister from the third front, but he also remained for only 7 months. After that, no party could form a stable government, so elections were held again in early 1998. And this time, the opposition coalition won. Vajpayee became Prime Minister again. See, the previous government lasted only 13 days, and this time it lasted 13 months. Due to leaving the alliance of a regional party, they didn't have a majority in parliament. Elections were held again in 1999. But what happened to the stock market's performance? Before the 1996 elections, Sensex rose by 12% in 6 months and then started to decline because the political unrest shook the stock market. The decline continued in 1998. This shows that when the government is unstable, the stock market is also volatile. But the decline in 1998 was also due to the Asian financial crisis. Countries that were seeing 7 to 10% GDP growth suddenly saw a decline in GDP. This also impacted India's stock market performance. After the 1998 elections, there was a decline, but signs of improvement also started to appear. Why? Let's see what happened in 1999. People again chose the ruling party, and the stock market expected this result. So, 6 months before the election results, Nifty was at 1024 points with a 36% return. Although there was a slight dip after the results, 6 months later, Nifty further increased to 1453 points, with a modest gain of 4%. But the interesting thing is that in the one-year period around the general elections, Nifty gave returns of 33%. Now let's fast forward to 2004. These elections were somewhat different. Most people thought the ruling coalition would come back. To prove this, I saw a news article in which most exit polls suggested that the ruling coalition would return. And at that time, the market was also doing fine. The Sensex was peaking at 6,250 points. But then came a twist in the plot. No single party got a majority in that election. Then came an even bigger twist. The opposition party and some smaller parties made an unexpected move. Market performance. So, let's rewind the clock and dive into the historical data. From 1996 to 1999, the Indian political landscape witnessed significant fluctuations. The ruling party lost its majority, leading to a series of unstable governments. These political uncertainties had a direct impact on the stock market, causing volatility and declines. In 1996, the ruling coalition lost its majority, resulting in a short-lived government that lasted only 13 days. Subsequent attempts to form stable governments also failed, leading to frequent elections and changes in leadership. The stock market reflected this instability, with declines attributed not only to political unrest but also to external factors like the Asian financial crisis. However, in 1999, the situation improved as the ruling party regained power. This outcome was expected by the market, leading to a modest decline after the election results. Nonetheless, in the year following the elections, the stock market showed signs of recovery, indicating investor confidence in the new government. Overall, the period from 1996 to 1999 highlights the close relationship between political stability and stock market performance in India. When governments were unstable, the market experienced volatility and declines. Conversely, the return of a stable government boosted investor confidence and contributed to market recovery. Now, let's move forward and examine how subsequent general elections influenced the stock market. After the stability brought by the ruling party's return to power in 1999, the Indian stock market experienced a period of relative calm and gradual growth. Investor confidence was bolstered by the prospect of a more stable political environment and the government's efforts to implement economic reforms. As the government focused on economic development and introduced policies to attract foreign investment, the stock market responded positively. The period following the 1999 elections saw steady growth in key market indices, reflecting both domestic and international investor optimism. However, the stock market's upward trajectory was not without challenges. Global economic events, such as the dot-com bubble burst in the early 2000s and the global financial crisis of 2008, had ripple effects on the Indian economy and its stock market. These external factors led to fluctuations and occasional downturns in the market. Despite these challenges, India's economic resilience and continued efforts to liberalize and reform its economy helped mitigate the impact of external shocks on the stock market. The country's strong fundamentals, burgeoning middle class, and robust domestic demand served as pillars of support during times of uncertainty. Looking ahead, the Indian stock market's performance will likely remain influenced by a combination of domestic policies, global economic trends, and geopolitical developments. As India strives to achieve its economic growth targets and navigate the complexities of a rapidly changing global landscape, investors will continue to monitor the stock market closely for opportunities and risks. In summary, the period following the 1999 elections marked a turning point for the Indian stock market, with improved political stability laying the foundation for sustained growth and resilience in the face of external challenges. Following the 1999 elections, the Indian stock market entered a phase of steady growth and relative stability. The return of the ruling party to power instilled confidence among investors, leading to a positive sentiment in the market. This optimism was further fueled by the government's focus on economic reforms and efforts to attract foreign investment. Throughout the early 2000s, the stock market witnessed consistent growth, buoyed by strong domestic demand and favorable economic conditions. Key market indices showed upward trends, reflecting the overall positive outlook among investors. The government's proactive approach to economic development, coupled with its commitment to reform, contributed to this bullish sentiment. However, the stock market was not immune to external shocks. Global events such as the dot-com bubble burst and the global financial crisis had spillover effects on the Indian economy, leading to periodic downturns in the stock market. Despite these challenges, India's resilient economy and robust fundamentals helped cushion the impact, enabling the stock market to bounce back relatively quickly. As the decade progressed, India emerged as one of the world's fastest-growing major economies, attracting increased attention from international investors. The country's expanding middle class and growing consumer market presented lucrative opportunities for investment, further driving the momentum in the stock market. Looking ahead, the Indian stock market's performance will continue to be influenced by a variety of factors, including domestic policies, global economic trends, and geopolitical developments. As India strives to maintain its economic growth trajectory and address structural challenges, investors will closely monitor the market for opportunities and risks. In conclusion, the period following the 1999 elections marked a phase of significant growth and stability for the Indian stock market. While facing occasional setbacks due to external factors, the market demonstrated resilience and continued to attract investor interest, reflecting confidence in India's long-term economic prospects. Market was expecting this result, so, 6 months prior to the election result, Nifty was at 1024 points with a 36% return. However, a little dip came 1 month after the results, but 6 months later, Nifty increased to 1453 with a modest gain of 4. Interesting thing is that during the general elections, in the 1-year period around it, Nifty gave 33% returns. Now, fast forward to 4 years ahead. Let's talk about 2004. These elections were different. Most people thought a ruling coalition would come. To prove this, I saw a news article. Most exit polls suggested that a ruling coalition would come back. And at that time, the market was also doing fine. Sensex was peaking at 6,250 points. But then came a twist in the plot. In that election, no single party could form a majority. Then came an even bigger twist. Opposition parties and some smaller parties made an unexpected move by forming a coalition. Now, newly formed opposition coalition secured 2008 seats while the ruling coalition had only 181 seats out of 544. Because no single party had a majority, the newly formed opposition coalition came into power. So, before the elections, both Nifty 50 and Sensex were below their 2-year date lows. Now it's time for the election result. Election results were declared on the next day, i.e., 13th of May, 2004. This back-to-back plot twist impacted the stock market too. The market dropped by almost 20 points 2 days after the election. But this got reversed. The best part was that within a year, investors earned a 23% return on their investments. So, the big lesson here is that maintain patience, peace, and courage in these 3. Make them your BFFs. This shows that the outcomes of politics are uncertain. Things can surprise us, but we, as investors, should operate with a long time frame to minimize market volatility. Now, let's talk about 2009, the election year. Voters decided to continue with the existing government, so how did the market perform? Just a reminder, in 2008, the crisis happened, and the stock market is down now. What's happening in the world? Until 2009, things started calming down a bit, and markets began to gradually rise. You might have observed that what happens in the US has a spillover effect on Indian markets too. Sensex and Nifty 50 jumped by 26 and 24 points, respectively, one day before the election result on the 18th of May, 2009. After the election results were declared immediately after the 2009 elections, for the first time in Indian market history, the stock market touched its upper circuit limit. This means the market rose so fast that trading had to be halted for a while. It's essential to understand that focusing only on one thing like elections and forgetting everything else is not right. The economy is impacted by many factors, not just a single event. Now, let's move forward and look at the elections of 2014 and 2019. In 2014, things changed. The ruling coalition faced a significant defeat, and the opposition party formed the government. In 2019, the ruling party continued. Now, what happened in the stock market in 2014 and 2019? Both Nifty 50 and Sensex increased before the election results, by 13 and 8 points, respectively. Now, a pattern is emerging. Generally, instability related to general elections kicks in a few days before the election date, and as soon as media projections and analysis start, drama begins in the stock market. There are more twists and turns than any Hindi serial. Now, after the election results, Sensex and Nifty 50 have mostly ended the year on a positive note. As I mentioned earlier, this was just my observation, so I double-checked and looked at more reports. For example, in this article, a small case manager has researched value stocks, and they've also looked at data from the past 20 years. Here, you can see that Nifty 50's one-year return during election years is generally positive. After elections, the stock market often calms down, and the new government decides its plan and priorities. This direction makes investors and businesses more confident, leading to more investment and economic growth. If the election results don't meet people's expectations or if no single party wins conclusively, the market can be quite shaky, as was seen in 2004. Remember, during election time, the stock market's performance is influenced by many factors like election manifestos, exit polls, economic policies, foreign investment, and more. Before wrapping up the video, let's take a look at sectoral performance. It's clear from this chart that during the period before election results, some top performers are in the metal, consumer durables, IT, and automobile sectors. Now, we have to wait and see which sectors will perform the best in this election year. We've seen how the stock market can behave differently during election time. We've also seen that not only elections but global economic and other factors also affect the stock market's performance. Don't worry too much about the ups and downs around elections. If we can endure the volatility for a year, everything might turn out fine in the end. These were just some observations from me. In 2024, several stocks could present promising investment opportunities in the Indian market. However, it's essential to conduct thorough research and consider various factors before making investment decisions. Here are a few stocks that investors might consider adding to their portfolios in 2024. Reliance Industries Limited, RIL. Infosys Limited. HDFC Bank Limited. Tata Consultancy Services, TCS. Bajaj Finance Limited. ICICI Bank Limited. Asian Paints Limited. With that, let's end today's video here. And yes, if you liked this video, do give it a like and subscribe to the channel. Remember, this video is purely for educational purposes, and there are no recommendations. And remember, don't forget to cast your vote, it's your right. See you in the next video. Until then, take care and stay healthy. Investment in securities markets are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund schemes, and other instruments traded on the